Welcome back to Crypto Warehouse. My name is Mike. This is Friday, the 19th of December, 2025. There is less than a week to go to Christmas Day, and the markets, are they going to bounce or are they going to flounce? We're going to go through an awful lot today. I hope you're all doing incredibly well. At some point next week, I will be able to stop wearing my hoodie, which I can't wait to do. I hope you're all doing incredibly well. What do we have in store for you today? We are going to be talking about the rebound. Yes, we've had the Japanese rate hike. What effect is that going to have on crypto? We're going to be talking about housing and young people. What does that have to do with crypto? That's exactly why we're going to talk about it. We're going to talk about the ADA Blues. We're going to talk about Aptos and becoming quantum resistant, which I know a lot of people worry about and feed fear into the markets that the likes of Bitcoin and Ethereum and Solana will not be quantum resistant. Well, Aptos have made a move. We're going to be talking about the $75 billion real-world asset problem. We're going to be talking about Aster and the latest airdrop, and then we're going to be talking about Fusion, which is between TAE, T-A-E, TAE, and Trump, and what that means for crypto moving forward. As well as that, we have the usual X-Files, and we have a quiz night this very eve, ladies and gentlemen. On the screen there behind the tree, you will see Wolfie's quiz night. This is tonight, 8 hours from now. Whatever time you are right now, in 8 hours, we will be running the Wolfie's quiz. Now, we did the last one, because I'm thinking that we haven't done a quiz in weeks. I think we did the last Wolfie's quiz on about the 19th or the 20th of November. So it's actually not skipped a beat, which is good. So tonight we have the Wolfie's quiz, 25 questions about Wolfie's. We'll be streaming it on Binance and, of course, the other channel. If you are on Binance, during that quiz, we will be taking down everybody's user IDs, and then we will be doing a Wolfie's Crypto Warehouse Wheel of Fortune spin and picking some winners to send probably USDC to you over the next coming days. And if you're watching in the other place, which we won't mention names of, those prizes will be Moon for probably the top 3 winners. Now, good morning to a few of you in chat. Venka is in chat. KB, Danny is in chat. Hidden is in chat. There was a lot of names over on Binance which I didn't write down, but good morning to you anyway, or good afternoon wherever you are. And remember, the quiz nights are going to come very, very quickly. We're going to try and pack in 4 specials between now and the end of the year. Now, there's 12 days left, 4 specials. That's one every 3 days. Now, the first one is Friday. That's tonight. The next one, I believe, is Maple. I think it's Maple night. Then we're going to have our Christmas quiz. And then, probably between Christmas and New Year, we're going to have our end of season, end of year rewards. We're going to give out rewards and awards to not just people in crypto, but also maybe some of our viewers. So there's a lot going on, and we are, of course, here for you. No matter the price of Bitcoin, no matter the price of Ethereum, you will always have this very tired, sad-looking face here for you whenever that might be. And that includes Christmas Eve and Christmas Day, New Year's Eve and New Year's Day this year. We will be streaming. And if I sound a little bit croaky, the Oracle has brought back, I don't know, Dubai flu, I think we'll call it. I've got Dubai flu from him. Anyway, I also hope you like the Christmas tree and the Christmas lights that I've put up. I think it adds a little bit of festive spice to the show. And of course, the title of the show today is Bitcoin Bounce. Are we going to see any kind of bounce between now and the end of the year? KB says we're going to go higher. I think we might have a relief rally, but there is a massive bag of liquidity between 18,800 to 2,000. Where are we going to go? Spin the wheel. Right, let's have a look at where we are. $88,140 for Bitcoin, coming in 1% up. Ethereum is starting to tickle $3,000 again. It was $3,150, I think, on Monday. We had that big correction to the downside. Bitcoin's only down 4.7% over the last 7 days. Ethereum is down 10% in the last 7 days. What's happening? So I think we might go above $3,000 again today on Ethereum. BNB 845. XRP's got to get back above $2. Again, Solana holding around 123, 125. That's really got to get back up to the 140s. And still nowhere near home. Cardano at 36.5 cents. I think that's taken more of a kick than most. Whether that's to do with the midnight airdrop, I don't know. But Cardano feels in a lot worse position than some of the others. And maybe we'll have a look at that at one point. Chainlink at $12.40 is an absolute steal. Hype at $24. Again, a good price. Monero, $4.40, still hanging above. I still think that's going down to below $300. There was, I think Raoul Pal came out and said something about it yesterday or last night and basically said, this isn't a change in market structure. This is the rotation of liquidity. And in the last cycle, we went into Monero. This cycle, we've gone into Monero. I don't believe this project is an $8.1 billion project. I don't believe privacy coins are the future. That's just my opinion. And that's based on the fact that I don't think we can have a world with 100% privacy. Gainers and losers then. There are a few nice gainers today. Morpho is up. Ethereum is 5th on the top number of gainers. WLF at 13 cents isn't doing too badly. Canton, Zcash is there. Sky, a few gainers. A few more gainers than yesterday at least. Losers then. Those of note. Toncoin at 143. Starknet is down. I remember when Starknet launched, it did an airdrop to people that staked their Ethereum, and I think my airdrop was at the time worth about $200, and I just left it there. I think now it's worth about $12, so that really hasn't done very well. Dash is down, Curve is down, Flare, Pump is getting absolutely hammered, down 32% in a week. Again, I'm not going to say go out and buy any of these coins right now because we don't know what's going to happen with the market. We could go down between now and May. But I haven't given up on Pump because it makes money. I haven't given up on some of these other coins up here because they make money. Toncoin isn't going to go to the wall because it's associated with Telegram. There are a lot of coins down here that are decent. Aerodrome Finance is a decent project. Anything under $1, Aerodrome Finance is a bargain. I still think it's a solid project. It's not even at $440 million. Can't believe that. Polygon is getting absolutely trashed, down at 10.5 cents. I can't remember a time it was that low. Celestia is down. Hype is down. So pretty much a middling market. Some gainers, some losers. At least it's not what I would call a red day, and it's certainly not a green day yet. It's kind of in the middle. Let's get on with some tweets then. What I have noticed is I have started going through the show a lot faster since my eyes were fixed. I noticed it yesterday, and I noticed it on Tuesday, that I got the stream done in like 47 minutes, 50 minutes. So I'm going to take my time a little bit more. I am trying to get through the show, obviously. I don't want it to drag on, but I think we can slow down just a little touch. Now, Nate Gerasi? ETF purchases of underlying crypto assets versus actual new issuance of crypto assets. In other words, spot Bitcoin ETFs have bought 711,000 Bitcoin since launch, while only 363,000 have been mined. Now, many of you want to know why the price of Bitcoin is going down. Who are the sellers? Who is putting the sell pressure on Bitcoin? Where is that sell pressure coming from? Now, you can look at the sources of sell pressure. You can say, right, it's miners, it's ETFs, it's certain sized portfolios. And what the argument is right now is that the OGs, the people who bought Bitcoin at $1,000, $3,000, $5,000, they're the ones selling. And the stats do support that. Think something like 400,000 or 300,000 OG Bitcoin have been sold. And the ETFs, which is why we harp on about them so much, why we talk about them so much, they're buying double the supply being created. Now, this may not continue for the rest of the 2026, 2027, 2028. It might not. But think of it this way. If you are selling a product and that product is being bought at twice the rate it is being created, what happens over time to the price of that asset? It goes up, clearly. So when I've been talking about Bitcoin, that the price action of Bitcoin being broken by the ETFs, which I've been talking about for nearly 2 years now, since the start of 2024, I've said this. The ETFs broke Bitcoin, the price of Bitcoin, and it did it by creating a brand new level of demand that didn't exist before them. And people can argue about charts, people can argue about whatever they want. It's my opinion, and I'm allowed to have it. And as I said yesterday about the rate cuts, I was saying the rate cuts should have happened quicker and deeper. And they haven't, and now we're in a situation where the economy is starting to crumble a little bit. And that's not based on me being a financial economic expert. It's based on the history of what the Fed does. And this is another one. I have said every month, at least once, Bitcoin is being bought at twice the rate that it is being mined. And at some point, it will break the camel's back and the price will snap to the upside. And I don't know how else to tell you this. It's not exactly double, but it's almost double. It's within 10 or 20,000 of being precisely double the amount of Bitcoin being mined. You think that's bad? Look at Ethereum. 3.5 million Ethereum have been bought. 1.3 million have been issued. So again, that's almost a 3x. Solana, I'm ignoring for now, even though the number is higher than the ones being produced. I'm ignoring it for now because it's too new. But look at the Bitcoin and look at the Ethereum. Either the ETFs have to stop buying, fair enough, or the price has to go up. And this isn't tomorrow, next week, next month. This is over a prolonged period of time. And maybe we get to the point where we see the final ends of the capitulation of the OGs who are selling, and maybe they stop selling. Maybe that takes a month, 3, 6, 12 months, whatever it might be. At some point, they're going to run out of Bitcoin to sell because it's a finite asset. Bitcoin has to be at a different price than it is today, given the way that the ETFs are consuming. It's a simple state of supply and demand. Now, of course, we can have black swans. Of course, you can turn around and say, yes, what happens if they find a fault in the Bitcoin code? What happens if it becomes, or it can't become quantum resistant? I understand all of those arguments, but we have to deal in the numbers that we have at hand. If we continue the way we're going, the price of Bitcoin has to move dramatically to the upside. That's all I'm saying. Now, core CPI is now at its lowest point since 2021 after missing to the downside by a massive amount. Risk assets like Bitcoin are rallying on the back of this, combined with a large fall in the dollar and bond yields. The 3-month annualized CPI is now at just over 2%. This should be this should be very welcomed by the Fed. More rate cuts are expected to get priced in following this data. Now, again, this is a little bit up in the air. And the reason it's up in the air is because we didn't get November, or we didn't get October. We didn't get October published in November, I think it was. So we're kind of missing some data. And this is great news, okay? However we want to divide this up, it's great news. But it's not the only bit of news that matters to the economy. Housing, unemployment is massive, and inflation. 3 things. Housing is starting to cool. Unemployment is starting to really creep up. And we now have inflation really starting to come down. However we want to dress that up, those are the 3 things. So we're on the way to more rate cuts. But as I've said, I don't think we get too much between now and May. That is 5 months away now. So, great news, but this isn't going to, on its own, this does not send us to $150,000 for Bitcoin. It does not do that. But it's very good news. Now then, let me move on a little bit. JP Morgan has moved its tokenized dollar deposits to Base blockchain. Very, very quick one here. We spoke the other day about Ethereum. Ethereum being the home of all DeFi. Base, remember, is basically a skinned version of, I think it's Optimism. It's a layer 2 that sits on Ethereum. So you will probably see the likes of Arbitrum, the likes of Base, probably not Optimism itself, but certainly DeFi platforms sitting on layer 2s of Ethereum certainly start to come to the fore, and JP Morgan's, the Goldman Sachs, the BlackRock start to expand out to different layer 2s. It's going to happen because it's a little bit faster, a little bit cheaper. But again, it doesn't mean that Ethereum is finished. Trump, I'll soon announce our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot. Again, I'm going to keep saying this point. Short term, lower interest rates to set fire to the economy is great for your bags. Lower interest rates in the long term may not be the solution that America needs to keep its economy stable. We don't want a boom and bust economy. We've just come out of a period of massive inflation. So we've seen the cost of goods go up 30 to 50% in America. And they've drained some of that liquidity out of the market, and they spent 2 or 3 years doing that, and now they're going to turn the money printer back on, and they're going to cut rates. Cutting rates means lots of things. It means companies can take on more members of staff. It means companies can take out loans to buy more equipment. That equipment has to get manufactured in America. People's mortgages come down in value. They've got more disposable income. But if you do too much of that too soon, what happens? People go out and spend more. More stuff gets built. The cost of building those goods goes up. The cost to the end user goes up. And we're back in inflationary zones. But it doesn't happen overnight. It might take a year or two. So what we don't want to see is Trump do all of these things and have 4 or 5% inflation by the end of next year, or maybe even the middle of 2027. That's what we don't want. So much as I agree we need rate cuts, we do it sensibly with big boy pants on, okay? Not schoolboy shorts on, big boy pants. And again, Trump doesn't care because Trump just wants his economy to flourish. Now, billionaire investor Ron Barron explains why you're getting poorer. Money loses 4 to 5% of purchasing power every year. The economy grows 2% annually. That's 7% a year working against you. Prices double every 10 to 12 years. Your savings lose half of their value in 15 years. Cash sitting still is a guaranteed loss. The system is designed to punish savers. This is debasement. Money is printed every year in every country that has its own sovereign currency. Money is printed, and the money that's printed over time costs you more to buy your goods because the money in your pocket is worth less. Now, I've made a video about this on the channel, which I can't mention, where I talk about this law, where basically when a government prints money, it goes into the economy in different ways. You just don't get it. It might go to the banks first, it might go to different companies first and different individuals first, and they benefit the most from money printing. You at the other end of the scale, you don't. Now, people with money who are in stocks and shares and property and whatever else, their money almost keeps par with inflation, 7 to 8% a year. People without savings, they are losing money every year because all they can do is consume. They can't save. So this punishes the poorest people hardest. And the richest people don't suddenly start hoarding more and more money. It's just that all of their assets inflate in value. Now, Bitcoin, and we're going to talk about that with property in a minute, Bitcoin is going to be an inflation hedge, and maybe more than inflation. Maybe it goes up 8 to 10% a year over the next so many years. If you go back to the bottom of 2022, which was 17,000, we're now at 88,000. So had you bought Bitcoin anywhere between 20 and 50,000, you'd be up 60% by now. So you're outstripping inflation. If you buy Bitcoin today and you wait 3 or 4 years, you're likely to be looking at maybe 100, 150% return, outstripping inflation. So you need to be looking at gold. You need to be looking at Bitcoin. You need to be looking at an index tracker because the stock market in America sits on top of money printing. That's why it goes up. It doesn't go up because those companies are so good. In fact, most of them are trash. There's only really 6 or 7 companies that actually make up the best companies in America, one of them being Nvidia, Meta, Apple. You strip them out of the American economy and it doesn't do very well. So having an index tracker keeps you at pace with inflation. Keeping some Bitcoin and some gold keeps you at pace over a long term with inflation. And this is what you need to understand. There is no point looking at a bank balance that's got £50,000 in it, or $50,000 in it, or 50,000 euros in it, and thinking, I am doing really well for myself. Because you might be doing well for yourself today or tomorrow, but in 20 or 30 years' time, you will not be doing well for yourself because that money won't buy you a great deal. And that's just a fact of life. Now, Bitcoin has rebounded on the Japan rate hike as Arthur Hayes sees the dollar at 200 yen. Bitcoin headed higher despite the Bank of Japan's interest rate hike, while reactions saw bullish risk asset signals and no further policy tightening. Again, I don't necessarily think that the Japanese rate hike is good for the economy. And one of the comments we got was about the fact that that rate hike was priced in. And yes, of course, it was priced in because they telegraphed it. But just because it's priced in now doesn't mean the next one isn't priced in or the one after isn't priced in. They're more than likely not. So if we see further rate hikes in Japan in March, April, May next year, that's going to suppress the market, in my opinion, a little bit more. So it's not necessarily a good thing, this. And I know Japan have got a 100-year direction to get all of these assets off the books or whatever they're doing. I get all of that. But this, for me, is the carry trade that I was talking about last Friday. And that's the one thing we need to keep an eye on. Because this one is fine. What happens with the next one? What happens with the next one? What happens with the next one? Maybe America and Japan come to a deal where there is some kind of stimulus between the two countries to keep Japan propped up. Let's see. So Bitcoin joins US stock futures heading higher in a curiously bullish reaction to Japan's interest rate hike. Commentators argue that no further hikes will happen due to economic forces. Bitcoin continues to hammer out a bottom on longer time frames. Bitcoin, it's 2.5% Bitcoin price games. Yes. In line with expectations, the BOJ have hiked the rates 0.75%. We've covered this as well. Against a backdrop of global central bank policy easing, Japan's move stood out. Don't fight the BOJ. Real rates is the explicit policy, says the former CEO of BitMEX. And again, just be careful listening to everybody, because this was the guy who sold Ethereum at X, bought it back at X times 1.3, and then is now left with a bag as Ethereum comes down below $3,000. So not everybody in this world knows exactly what they're talking about. Ask Rich Dad, Poor Dad. So there's a big load of details down here about this. What I would say is that the uncertainty has gone. Markets like certainty. So this is a good move for the markets. And I think that's not a bad thing in general. Good morning, Tariq. Good morning, Solo Sky. I hope you are all well. As I'm saying, I'm just keeping an eye on time to make sure that we don't get to the end of the show too quickly, or we get to the end of the show in an hour and a half. So what I would say about this is it's certainty. It's done now. It was priced in. What isn't priced in is what could potentially happen in the future. And I believe there will be some kind of stimulus coming out which will prop Japan up, because America is big enough to be able to come to some kind of deal with Japan. So I wouldn't worry too much about it for the next couple of months. Anyway, it's one less worry. And I don't suddenly think we're going to go to 120,000 on this news. But conversely, I don't think it's going to send us down to 2,000 either. Now then, 45% of young investors own crypto as housing dreams fade. Nearly half of younger US investors hold crypto as traditional wealth building paths deteriorate. Allocating 25% of portfolios to non-traditional assets, triple the rate of older generations. 73% believe conventional financial systems favour previous cohorts. Nearly half of younger US investors now hold crypto. We don't need to keep repeating all of this. They asked 4,500 adults, which is not a bad number to begin with. Beyond the allocation gap, younger investors demonstrated marked different attitudes towards digital assets, with 4 in 5 viewing crypto as creating financial opportunities that wouldn't otherwise exist for their generation. Despite reporting greater optimism about economic conditions, younger investors don't believe traditional wealth building mechanisms work in their favour, talking about housing deterioration, wage growth lagging, and the fact that old people have all the money. Now, if you are out there watching this right now and you are under 30 years of age and you don't own a house, you should seriously consider buying what I was just talking about, which is Bitcoin. Certainly look at a index tracker, stocks and shares index tracker, and you should be trying to beat inflation. Now, what happened is governments around the world were naive, and BlackRock and many others came along and set up housing funds, which basically went around and bought all the housing stock. And a good example is in the UK, they built 1.1 million houses 40 years ago, 30 years ago. 1.1 million houses. Today, I think 90% of those houses are owned by funds. They're not owned by individuals. And what do those funds do? They rent them out to you. And America is ahead of this already. You're looking at America and people are paying thousands of dollars a month for a house. And it's just astronomical. And they want to eke out a return. Whereas maybe an individual that owns a house just wants to cover the mortgage and make a few quid for repairs out of it. So what you're seeing is all the first-time buyers can't buy houses because all of the wealth funds go and buy them all. And it's a government's fault. And governments need to bring in laws that, very simply put, stop anybody from owning more than so many houses. Let's call it 10. And that way, you can drive out these funds, you can drive out these property style wealth family funds, whatever else they do, and basically give houses to young people. And specifically build houses that part of the deeds in those houses mean you are not allowed to ever sell that house to a company. That house is never allowed to be owned by a company. And you do that, and you make sure that you build houses for young people. And that's how you fix it. But we don't have that fixed today. Today, we have the problem of you not being able to afford rent and food because of these people. So what you have to do is you have to find a way to accelerate your growth and your wealth to the point where maybe you get on the property ladder. And that is where the likes of Bitcoin and gold and the index-linked trackers come along, because that's how you build and that's how you grow faster than the rest of the people running around you. So you can get on the ladder. And there will people tell you you don't need to own a house, okay? BS. Don't listen to anybody. Now, I know CZ sold his flat and bought Bitcoin with it. I know he did that. But at the end of the day, if you buy a house today and you pay off that mortgage at the rate or faster than the rate you need to pay it off, you suddenly have no cost base of a mortgage or a rent. My house, I think, costs me £250 a month. And the reason it costs me so little is because I overpaid my mortgage, and now I've got such a tiny mortgage that I'm not bothering paying it off because it's good for credit scores and things like that. So my mortgage is £250 a month. But I didn't do that by being lucky. I did that by paying off more than the mortgage. So it came down faster. And what I'm saying to you is, to get to that point, you need to have an asset that appreciates faster than house prices go up and inflation. And that, for me, is Bitcoin. At this moment in time, gold, but gold has obviously been on a massive run. That's likely to come down soon. And at least an index tracker. And you will outpace inflation. And at some point in your life, you will be able to afford your own house. And that is what you need to be able to do. And I will argue the point with anybody who says you shouldn't own your own house, it's dead money, blah, blah, blah. Nonsense. Those people telling you to do that live in ivory towers. They've already got several $1 million. You speak to somebody working in a coffee shop that can't afford their rent. You ask them if they should own their own house and pay a lot less. You ask somebody working in a supermarket or working as a cleaner if they could own their own house. Okay? People in ivory towers, unfortunately, don't understand what reality is in this day and age. And that's the problem with them. You need to give people property, because if you don't give them property, they don't have a sense of belonging to society. They just rent. They don't care about the property that they're in. They live in a council house. They don't care about the property that they're in. They own their own home. Now we're talking differently. Now then, let's get back onto crypto, as I've had my little rant for the day. Cardano at a critical moment, 20% drop or 50% rally ahead. Every little bounce we get is an easy short until conditions change, one ex-user has stated. Now again, Cardano is not in a good position. 60 cents and 80 cents were the good prices for Cardano. We're at 36 cents. That's another 40% down from where we are. 50% rally from 36 cents takes us back to almost 60 cents. I think we'd need a bit more. I think we need a 60% rally from where we are. And it's not in a good place. But Cardano's been here before. Cardano's been below 20 cents before. So I am not giving up on Cardano. I'm thinking if we don't get this relief rally, there is a lot more pain to come for everybody and for everything. So it might not be a bad time to have the cash on the side, as we said yesterday, to start to pick up the conviction tokens that you've got. You know, Hype or Aerodrome, Bitcoin, Ethereum, certainly, maybe even Solana. Have some conviction plays. If you're into Cardano, you like what their community do. I hold a bag of Cardano. I've held it now for about 3 years. I believe in the project. I think the project's got longevity, but it has problems like every other chain. Now, it's down 22% over the last month. As of this writing, ADA is at 36 cents. And it is far below the local peak at $1 witnessed earlier this year. Its market cap has gone below 13.5 billion, further distancing the asset from crypto's top 10. The renowned analyst Ali Martinez, we've not had that name on here for a very long time. His prediction, maybe we continue to 29 cents, which I would agree with. Prior to that, he argued that ADA's super trend had flipped bearish, reminding us that the last time this happened, it came down 80%. So 80% from $1 would take us to 20 cents, which is kind of a round trip from where we were 3 years ago. Every little bounce we get is an easy short on anything until conditions change. And again, we can't look at Cardano in isolation to the rest of the market. We might want to, you simply can't. Despite the pullback, those forecasting that ADA can surge substantially in the near future are just as vocal. Marzel claimed the asset has shown early signs of a turnaround with the divergence in the RSI and MACD. Nonetheless, he noted that the price remains below the 50 and 100-day MA, suggesting a move towards 50 cents would depend heavily on a breakout from current territory, which I do not see happening in this moment in time, unless we get this relief rally. And remember what happened the other day. We got to 90,000, and then they decided to take out all the longs, brought us straight back down to where we were. We're now back at 88,000. Get back above 90. Get back towards 91, then we can talk about any kind of relief rally. But until we do that, we're nowhere near where we need to be. The TA measures the speed and magnitude of recent price changes and often is used by traders to spot possible trend reversals. As mentioned, below 30 and considered bullish for the price, above 70 is a possible correction. ADA's exchange net flows are also worth observing. Over the past several months, outflows have significantly outpaced inflows, indicating that investors have been moving from sexes to self-custody. Now, that is a very interesting point because that applies to Bitcoin, that applies to Ethereum, that applies to Solana, not just ADA. So what we're seeing is, traditionally, when people believe the price is going to go down, they send their crypto to exchanges to sell. Traditionally, when you see money from Circle or Tether going to exchanges and you see the coins being taken off exchanges, that's a sign that people think the price is going to go up. But we're seeing the reversal. We're seeing prices coming down, but less coins on exchanges. And we can't blame, in ADA's case anyway, we can't blame ETFs because it doesn't really have an ETF right now. So it's a very confusing market that we're in right now. But if I was a betting man, which of course I'm not, but if I was in the predictions markets, I would say 30 cents is more likely than 60 cents right now. And that is just because of the market that we're in. And much as I would love to see an uptick in the market, we don't have any time left. We ran out of time. We ran out of time in November. We didn't get the move to the upside. And now we're going to get through a very, very low liquidity, low trading period for the next probably 3 weeks, and I just don't see anything happening. Maybe I'm wrong. That would be great. Aptos introduces post-quantum signatures before they're urgently needed. Again, this is a good sign. I'm trying to bring chat up, and my chat is not working on my phone. Good morning, Manjeet. I hope you are well. Let me just double check. Right, Aptos introduces post-quantum signatures. Now, this is the big thing that you're hearing all of these TikTokers talking about. You'll hear them. They'll come on and will say, get out of Bitcoin now before quantum computing comes in and steals all of your Bitcoin and ruins crypto. That's what you're going to hear. You will hear some people talking about it. CZ's talked about it. I think Charles Hoskinson has talked about it. Raoul Pal has talked about it. I think even Ben Cowan has mentioned it in the past. And quantum computing and the ability to break Bitcoin's keys is what everybody is talking about. And I've mentioned on here before that some chains have had quantum resistant code already and have had it for about 18 months. And now Aptos is probably one of the first big ones to introduce this. Bitcoin will get there eventually, as will everything else. And it's not necessarily the chain, it's the wallets as well. Your wallet getting hacked is another problem. But listen, if you're North Korea and you've got all of these various different things that you can go after with your quantum computer that you've built out of scrap metal and broken down rockets, you can go after governments, you can go after banks, you can go after crypto. There's multiple targets. So don't just think, oh, this is a crypto problem. This isn't a crypto problem. You can bring down an airline, or you can bring down airlines and airports, and it will cause chaos. So don't just think this is a Bitcoin and a crypto problem. So it's proposed an optional post-quantum signature scheme citing long-term risks that advances in quantum computing could pose to existing cryptography. So Aptos, this is like the same thing said 3 times. On Thursday, it outlined the post-quantum signatures, addressing the network's reliance on digital signatures for ownership, transaction authorization, and overall security. While existing cryptographic schemes remain secure against classical computers, research warned that sufficiently powerful quantum machines could one day forge them, potentially compromising account security retroactively. And again, this is just another in the long line of threats against crypto. Why do we have Ethereum Classic? Because there's a 51% attack against Ethereum, and they forked it to modern day Ethereum. ETH Classic still exists, so it's happened on Ethereum. It's happened in many other places. A 51% attack is where you basically control 51% of the hash power, and then you can start to edit different blocks on the blockchain. Not going to go into that now. So this is just another in the long line. Quantum computing is not a distant spectre anymore, Aptos Labs wrote in a post, pointing to early discussions around quantum scaling by IBM and growing regulatory momentum, including the publication of post-quantum cryptographic standards by the US National Institute of Standards and Technology, NIST. This matters for networks like Aptos because cryptographically relevant quantum computers can make today's signature schemes forgeable, possibly breaking security models. In response, developers have proposed AIP 137, an Aptos improvement proposal authored by cryptographers at Aptos Labs, which would add support for post-quantum signature. And there is the details of that, which we don't need to go into. Suffice to say, the biggest conversation about this now is to do with what to do with Satoshi's wallet. That's the biggest conversation. Satoshi, and maybe even Lost wallets, will not be able to be upgraded to the new quantum-resistant wallets. And that's going to be a problem because Lost wallets, which don't make the migration, they will get hacked. Satoshi's might get hacked. Somebody has suggested that a white hat hacker actively hacks Satoshi's wallet, moves it to a quantum-resistant wallet, and then destroys the keys. That's the conversation that interests me, because over the next 5 or 6 years, exchanges like Binance, MetaMask, Phantom, the wallets themselves, they're all going to become quantum-resistant. The chains are going to become quantum-resistant, but the one thing that won't be will be Satoshi's wallet. And at this moment in time, according to the experts, it's hackable. So that's the big one for me. Again, we can talk about Solana doing this. We could talk about Bitcoin doing this. And it's in early stages simply because we don't need to worry about this today. It's a worry for the future. Okay, so is this great for Aptos? It gets them the headlines. Is this going to fundamentally change the chain? No. Could Aptos be dead in 5 or 6 years' time because of lack of use? Possibly. But it's still good for you to know, because if you meet somebody in your coffee shop or in the pub who says, oh, what about quantum computers? Well, that's going to break Bitcoin. You can turn around and say, Solana are talking about it, Bitcoin are talking about it, and Aptos have already got a proposal to fix the problem. So the cryptographers and the developers of these chains, they're already working on it. That's all you need to know. That's all you need to know. Just best to be prepared. And then tell them you don't own any crypto. Don't forget that. Now, the real-world asset market faces a $75 billion problem as blockchains fail to connect. New research from RWA.io warns that fragmentation across blockchain networks is quietly draining value from the fast-growing market for tokenized real-world assets, imposing costs that could scale into tens of billions of dollars if unresolved. In its report, the Global Real-World Assets Hub estimates that inefficiencies caused by disconnected blockchains are eroding between $600 million and $1.3 billion in annual value across today's roughly $36 billion real-world asset market. Looking ahead, if the same structural frictions persist as the sector expands towards $16 trillion to $30 trillion by 2030, the annual value drag could swell to between $30 and $75 billion. What I love about this article is this headline is based on the furthest outlier of the price. Do I think we are going to 10x, 9x the value of real-world assets in the next 4 years? No. I think a good estimate is going to be between 5 and 10 trillion. I don't think it can grow that quickly. The demand isn't there. And maybe if all of the S&P moved on to the blockchain, maybe, fine, okay. But I just don't see it being that quick. So I think this is a few $1 billion in problems. So I do. So the market growth outpaces the infrastructure. According to the report, the tokenized real-world asset market reached $36.27 billion in November, a 2,200% increase since 2020. More than 500,000 unique asset holders now participate in the sector, with participation rising 11% in November alone. Private credit represents the largest sector. That's the sector that, of course, Maple Finance is in, who we cover a lot on this channel. In fact, they are on, if I look very closely, I think they're on our Christmas tree. There you go. So Maple Finance are one of the projects that we cover. They're part of the private credit. 52% of real-world assets are on Ethereum. Polygon has emerged as a dominant venue for tokenized bonds, representing 62% of global issuance. Now, again, something I don't understand about Polygon. It's got Polymarket, the largest predictions market in the world, and it accounts for 62% of tokenized bonds, and yet the price is suppressed. Clearly, Polygon needs to consider becoming its own blockchain, separate itself as a layer 2 from Ethereum, become its own blockchain, and then it will go innumerably higher. So Marco Vidri, co-founder and chief operating officer RWA.io, said the mismatch between growth and infrastructure maturity has become the setback. Fragmentation is the single greatest impediment to market realizing its multi-trillion-dollar potential. In traditional finance, the EU-wide SEPA instant mandate shows how value can move across in seconds. Tokenized assets should just be as frictionless. The report details how network silos create measurable inefficiencies. Again, I do agree with this, by the way. This is actually the problem. But again, it's not a problem that isn't being solved. And one of the issues is, if I hold Tesla stock on Ethereum and I want to move my Tesla stock to Solana because I want to stake it on Remora, for example, I can't, can I? It's not possible. If I want to move my Ethereum over to Solana to go and buy my Tesla stock on Remora, I have to jump through hoops. I have to get wrapped Ethereum or change it to Solana. It's a mess. And what we've been talking about on here for a very long time is the satellite TV problem, which is you've got 999 TV channels from 26 different satellites in space, and it's all being controlled by a remote control. And we don't have that in crypto, and that's what we need in crypto. The same way that we want to be able to do things in one wallet. And last count, you needed 11 separate wallets to cover the top 50 or 60 blockchains. Well, how is a retail user ever going to bother with that? They're going to go and use Binance. They're going to go and use Robinhood or Revolut. They're not going to go near the blockchain. They're not going to get a wallet. So that needs to be solved. And again, these things are being worked on. I think Phantom and MetaMask can't get any worse than it is. That might get better. And he's right. It causes friction. And what you end up doing is you end up choosing, for example, Solana. You end up using the Solana blockchain. But maybe the best solution for you and what you want to do, maybe your best solution is actually on Arbitrum. But you're not on Arbitrum, you're on Solana. So you lose your returns. Even something simple like if you look at Syrup USDC. Say Syrup USDC might pay you 6.5% if you've got it on Binance. But if you go to DeFi and you put it through a loop, maybe you can earn 12 or 13%. So you've got lost potential just by everything being so messed up. And I think what's going to happen, and again, putting my crystal ball in front of me on the table, what I think we're going to see is the likes of Binance allowing you to tap into DeFi without ever losing and leaving Binance. And I think that's the solution we need, because Binance exists as an app and a website. And I think if I want to go and tap into the Morpho pools, or if I want to go and tap into the Aave pools or the Camino Finance pools, why can't I do that through Binance? I should be able to do it through Binance, and then Binance becomes your remote control. And that's how I want to see it work in an ideal world. And of course, Phantom can do the same thing, other exchanges can do the same thing, but you need a solution. And maybe they'll end up being multiple solutions, who knows? Now then, let's move on very quickly. Remember, if you are here and you've never seen me before, smash the like button and say hello. I have got a poll question of the day, by the way. Have you been naughty or nice? Is the poll question today. And 33% of you in chat have been naughty. And 67% of you have been nice. And for all the people watching, we've only had 6 votes. I think that's shocking. I don't even want to talk about who I think has been naughty and nice in chat, because I think Tariq would get offended, certainly. Anyway, let's talk about Aster. Aster launches a new airdrop with lowest emissions so far. Again, I'll say this, I'll keep saying this. You don't pick sides in crypto. You pick multiple horses that you think are going to win the race. You can hold hype, and it is not illegal for you to hold Aster. You can hold BNB, and you can hold Solana. Okay? You're not in a cult. You hold the assets that you want to hold, that you like the most. Not me, not some random guy with sunglasses on X with a Solana tattoo on his forehead. You buy what you want. Now, Aster launches a new airdrop with lowest emissions so far. Aster is preparing to roll out the 5th stage of its program later this month, but this round looks very different. Known as the Crystal Phase, the up-and-coming distribution introduces Aster's most restrictive airdrop design to date, placing a strong emphasis on supply control rather than rapid token release. Again, the one way to ruin your token is issuance, creating more of them. There's a really interesting post about Solana in 2021 and Solana today. If the number of Solana tokens that existed in 2021 existed today, the price of Solana would be $245. And that's because there are more Solana today than there were 4 years ago. The same thing can be said about Bitcoin. The same thing can be said about Ethereum, about ADA, about every other token. They are currently making more of them on a daily basis. So in 4 years' time, there will be more Ethereum, there'll be more Solana, there'll be more ADA, and this token issuance over time will hinder the price. Of course, you don't want a token to issue 20% of its tokens every year, but you also want a token like, say, for example, Bitcoin's, I think Bitcoin's inflation is about, what, 2% right now? Something like that. Ethereum is probably about 2%. Staking rewards, so they're not too high. Solana's was high, and now it's coming down. Aster will be doing the same thing, and many other tokens will be doing the same thing. And what the other thing that helps, of course, is token burns. So Aster, Hype, using Ethereum as well, using the transactions to burn their tokens. That's a good thing as well. So Aster is shifting towards lower token emissions and tighter supply control. The latest airdrop rewards long-term participation while burning tokens from early claims. The changes align with Astra's transition towards launching its own blockchain and governance system. Instead of handing out the full allocation immediately, Astra is using a split claim model that puts the decision in users' hands. Eligible participants receive a base portion that can be claimed at any time, but an additional bonus portion is tied to a lockup period. So again, I think the one big thing that's happened in crypto, the evolution over the last 3 or 4 years, is the token airdrops seem to be drying up, and the cleverness associated with those token airdrops has been tightened up as well. Instead of saying, right, we're going to give you 80% of our tokens on day one and then watching the price go to zero, they're being a lot cleverer about it. They're being less naive. Had they asked an old man how to do this, it would have been done in a totally different way, because anyone with a brain could tell you giving 50% or 60% of your tokens away is going to result in a massive, massive sell-off. And over time, if your project has a buyback and burn, if your project generates revenue, then it will pick up in price. But why go live knowing that your price is going to be suppressed for the first 6 months? Again, they haven't got it right. Nobody will get this right. There probably isn't a correct answer. So those who claim early permanently lose the bonus, which is burned and removed from circulation, and it's designed to reduce sell pressure. That's what it's all about. You want two things from any kind of token distribution. You want to reduce the sell pressure, and you can do that through lockups. You can do that through staking. You can do that through burning. Why do I not sell my Jupiter? Because it's staked and I earn rewards. And it was an airdrop that I got, and I didn't pay a penny for it. So I've used it to generate multiple airdrops, and I'll probably continue to use it because I believe it has a future. And I'm sure the same goes for Aster token holders as well. If they believe in the project, they'll probably buy more of it. So at the same time, the burn mechanism introduces a deflationary element. Tokens forfeited through early claims do not return to the ecosystem. They are burnt again. This is what we want. And this is, you know, they've done things the right way. There was massive hype about this project at the beginning. Obviously, CZ was involved, not involved. Don't know how to describe that. But I think they were launched with YZI Labs, which is his incubator. So CZ is involved. CZ is experienced. CZ knows what he's doing. He's been around for a very long time. And, you know, much maligned CZ, by the way. But again, he knows what he's doing. You want somebody in your project that's old and understands what is going on. And that's just my humble opinion on the matter. I think it's great having 20 to 25-year-old kids build a multi-billion-dollar company. I think that's great. But you do need somebody with grey hair. You do need a person in there that's been through it before. And again, you look at CZ, you look at people like Brian Armstrong. They've been around for a long time. Do they still make mistakes? Of course they do. Nobody's infallible. But they've got that experience and wisdom to help. It doesn't mean you need to bring in old people to slow everything down. I just think sometimes projects like Jupiter were making mistakes before my very eyes that didn't need to be made. And had they had somebody of my age in that business, they wouldn't have made those mistakes. And it's all well and good being young and being positive and full of vim and vigor. That's great. But you need to do it in a slightly more sensible way. And that's one of the reasons I like CZ. He's not that old, number one. But number two, he's got a very calm head on his shoulders. You know, Brian Armstrong in some respects as well. He digs at himself as well. I like Brian as well. Others are just two-dimensional, and they happen to fall upon crypto, fall into a position in that business which gave them a good start, a good position, and they will either fade away, be bought out, or die. So there we go. Anyway, Tay, I don't know how to pronounce this, Tay and Trump Media to create a $6 billion publicly traded fusion firm. Stock surges 35%. Again, value extraction. You see this man? Value extraction. That's what he is all about. And it's not necessarily a bad thing, but it happens, okay? So the merger between Trump Media and Tay forms a $6 billion fusion company split 50-50. The combined firm plans to start building a 50 megawatt fusion power plant in 2026 with larger plants to follow. TMTG will provide $300 million in cash to support the fusion work and expand its energy push. Now, this is a bit of an unbelievable move for me because Trump Media is big. And I never for once thought that this was going to work and this was going to happen. Now, he does a lot of things. He's a very good businessman. He's been around for a very long time. And he's made many, many mistakes when he was younger. But this is a really good move. It adds a massive amount of brain to Trump Media. And it adds a lot of cash to the building of this plant. And that will then, in turn, generate an awful lot of wealth. So this is a good move. Each group will hold 50% of the equity once the merger closes in mid-2026, according to a press release. Traders did not hesitate. Trump Media rose more than 35%. The deal sets the companies up to begin work in 2026 as the first utility-scale fusion power plant in the USA. They set the size at 50 megawatts, with the later planned plants at 350 to 500 megawatts. Now, that's a lot of energy. A little sneak into this, by the way, is that Gibraltar will be building a $1 billion AI plant here. And Donald Trump Jr. was here 3 weeks ago signing that deal. So one of the things that I think Trump is going to do is he's highlighted two different markets, AI and crypto. And yes, they cross over. And his business is moving towards controlling as much of that pipeline of infrastructure as possible. So this is why he's doing it. I think it's a great move. What I could see happening, by the way, is that Trump Media buys out Tay in the future for maybe $6 billion again. But I think this is a great move. He is moving all the right pieces, but he isn't doing it, of course. Donald Trump Jr. and Eric Trump are doing this. And that's why I would never back, in the next 3 years, I would never back against Trump or World Liberty Financial, because these kinds of moves are what makes him, him. The same way as we were talking yesterday about Binance. We were talking about CZ is going to have to reduce his stake for Binance to become a company. I think Trump Media will step in. I think they will buy that stake off CZ. I think they will move Binance to America. I think it will be there for a couple of years, and then I think they'll IPO. And then Trump Media will exit via the IPO. That's how I see it all playing out. So when we talk about this man, we talk about value extraction. But it's not extracting from a single constant number. If we have a $1 trillion pie today, and that becomes a $10 trillion pie, Donald will walk away with $1 trillion. That's the value extraction I'm talking about. So he makes money by making money. He will make money out of the American economy by making the American economy stronger as a business. Doesn't necessarily mean it's good for everybody, but that's how I see him working. So I think this is I didn't expect this, of course, because who could possibly predict that Trump Media would partner with a fusion power company? Nobody. But this is great. This is absolutely fantastic. I am all about that. Now, we've got 40 seconds left. So I've kind of got back onto speed. Now, we have the Wolfies quiz in 7 hours. 7 hours from now, we have a Wolfies quiz, and it will be on Binance Square, and it will be on that other place. If you're on Binance Square, we will be collating all of your user IDs during the stream. Don't put your user ID in now. The stream will start about 7 o'clock. It will run for an hour. I will collate all of the user IDs from Binance Square. And then tomorrow, which is Saturday, or Sunday, whichever day I can do it, I will do the Wolfies Crypto Warehouse Wheel of Fortune, and I will pick some winners and send you some USDC. If you are in the other place that we don't mention, we will, of course, have our usual quiz. 25 questions written from scratch. Now, I almost forgot this part. This is the part where I say, if you watch my streams, I give you the answer to one of the questions. So, Tariq, are you listening? This one's for you. The answer I'm going to give you is this one. It's question number 10. How many Shark hoodies are there? That's the question. And the options will be 8, 10, and 12. And the answer is 8. There are 8 Shark hoodies. So question number 10, Tariq, there is your answer. So you're guaranteed to get a minimum of 1 out of 25 tonight. Now, I've also changed every single question. I wrote them all this morning. I got up at 6:30 again. I've rewritten all 25 questions. You are not going to get an easy ride, okay? 8 Sharky hoodies. That's all you need to remember. Now, that's it for the show. It's 12:01. We're going to see you tonight at 7 p.m. Countdown will start at 10 to 7. The live stream isn't set up on Binance Square yet. I'm going to go and do that now. The live stream is on the other place already, so turn your notifications on. And I will hopefully see Danny, hopefully see Tariq, hopefully Manjeet, Solo Sky, maybe even KB will be there. Who knows? Now, remember, before you leave, smash the like button and give us a follow or subscribe or whatever buttons you've got in front of us. Help us grow. We're almost at, by the way, I think we're almost at 10,000 followers on Binance Square. We stopped streaming on Binance Live, I think, at 200,000 followers. And now I think we're up to 10,000 followers on Binance Square. So the plan there is clearly next year we're going to get towards hopefully 25,000 followers on Binance Square, and then 50 and then 100 or whatever. So that's the plan next year. Thank you all for watching. You, as always, have been great. I've been Mike. Until tonight, adios.